All right, what's up, you guys? We are getting ready for another Ask Alex. We'll get Alex in here joining in a minute. We got Jay joining in here in a minute with us as well. And we'll let everybody kind of trickle in here in the room, and then we'll go ahead and get things started. We're talking house hacking today, guys. House hacking 101. Should be an awesome chat, kind of diving into some more specifics on house hacking. So as I mentioned, we'll have Alex joining us, Jay's joining us, and we'll be diving into house hacking today. Welcome, Alex. Welcome, Jay. Again, guys, we're really excited to kind of dive into some house hacking with you guys today. Alex has some fun stories about when he first started house hacking and how that kind of propelled his career. Use that chat feature right down here at the bottom of the page. Use that chat. Go ahead and let everybody in the room know where you're from, what your name is, what your Instagram handle is. That way we can go ahead and connect with you guys and make sure that we're staying connected outside of the group. Continuing to kind of grow that network that we have. Speaking of that network, Jay, we have some updates as well, right?
Yes, that is correct. Hello, everyone. Happy Wednesday. Ask Alex number 12. We did finally create our Facebook group, so that's really exciting. I've seen a lot of familiar faces. Daniel, our guest speaker from last week, posted his performa, and also Alex posted his JV contract with the calculator as well. I'm going to go ahead and post the link here. If you'd like to join, just go ahead and click on the link and we will add you all.
And guys, when you do join, Alex put a post in there. We want to hear from you guys in that post. Alex asked a question to you guys saying, who are you and what do you need help with? So make sure when you do log into that private Facebook group that Jay just put down in the chat, that's a private group only for our group of friends, our group of network right in here, so that we can help each other out. If you have something that you're stuck with, that you need help with, share that in that group. That way we all know, hey, these are things that we need help with, and there's people in the group that are probably going to be able to help you. Whereas we're as strong as our weakest link, and this group is very, very strong. So, very, very excited to have you guys get access to that. I'm going to ask a quick poll here in just a second. We're going to want to know from you guys, who is actively interested in house hacking? If you guys are, actively looking at house hacks, we want to know. That's what we're diving into today. It's going to be House Hack Central. So without further ado, Alex, why don't you give us a little bit of an intro into house hacking and kind of tell us a little bit about your experience in the past.
What's up, everybody? What's up, my deal makers? I'm so happy to be here this Wednesday. I'm back on Maui. I was in Oahu last Wednesday when we did our last webinar. So I'm super happy to finally be home after about 24 days out of town, mix of a couple of weeks in LA, then about 10 days on Oahu, hanging out with a lot of cool people there, a lot of other investors, business owners. So yeah, I'm really excited to be back here in Maui, getting back into the flow of things. But this webinar today is going to be incredible, you guys, because house hacking is near and dear to my heart. I've done it multiple times. Also, we're going to be going through specific scenarios that are active listings right now. So you guys can see, hey, I can go and do a house hack as well in my market, because we're going to be analyzing deals in Southern California, which is a market that's traditionally very expensive, but it can still be done. And I want to show you guys exactly what the numbers are. So just give you a little bit more guidance on how to think about it. I think there's a mindset, right, about house hacking that people need to get around, which is this idea of like, hey, I would prefer not to have someone else in the other bedroom. I would prefer not to buy a duplex and just buy a nice house. But you're making wise financial decisions that are going to be impactful to your wealth down the road. So you need to start there, to start making some sacrifices. But it's not all bad. You're going to get paid to do it in the house hacking strategy. So we're going to cover all that. So make sure you guys are here to the end.
Yeah, and Alex, I'm just going to go ahead and share this poll just so everybody can kind of get an idea. You guys can see the results here on your screen. We got about 90% of people here in the room are interested in house hacking. It looks like 2 people are not interested in house hacking, and no harm, no foul there. The thing about real estate investing is there's hundreds of different ways that you can do it. And as Alex mentioned, some people, that isn't going to be adding that extra bedroom or sharing a home with somebody, or breaking down and doing a house hack. So it isn't for everybody, but it doesn't mean that it isn't something that you want to at least know a little bit about. So Alex, why don't you kind of, enlighten us, like, what is a house hack?
Well, it's a house hack is simply when you purchase a property and with the intention of renting out the additional space, whether that's you're buying a duplex and you're renting out the other unit, perhaps even a bedroom within your unit that you're going to be occupying, or buying a triplex and then renting out the other couple units. It has so many benefits, such as you know get the training and the experience of becoming a landlord. You also have ability to reduce your monthly mortgage payment and expenses, so you could save more money and invest more. So there's just a lot of pros to it, but essentially you're buying a property with the intention to rent out some of it, and you could also do it with a house. So if you're renting out, you know, say you're buying a 4-bedroom house. I know that there's people that have attended this webinar in the past that have those 4 or 5-bedroom houses, and they're renting them out bedroom by bedroom, essentially kind of hacking that, and then maybe living in the garage and converting that into a legal unit. But it's just really this way of reducing your monthly expenses, and then you know, eventually turning that potentially into a rental property full time. But it's one step first, which is house hack it, reduce your expenses, save money, and then go on and then refinance, and then turn that into rental, and then you can go ahead and potentially do that in the future again. Yeah.
And I know, you know, we got Dante in the room right now, and Dante's an investor here in LA. He's actually done that, Alex. He went and bought a home with multiple bedrooms in it, added other bedrooms to it, increased the rents, increased the value, and that by itself is a house hack also. So doesn't always have to be that duplex, right?
Yeah. And I have a quick story about a house hack that I did that helped me become a full-time investor. And I remember I was living at the time in Studio City at this really nice property that I was actually leasing it with my brother, but it was a nice townhouse. If you guys are familiar with Southern California, Studio City, it's one of the nicest areas of the San Fernando Valley. And believe me, I didn't really want to move from that property, but I got this opportunity to work for the second group of investors. They're very successful. They're flipping over 150 houses annually. And so I had to go take this position down in Torrance. So some of you that might not know, that's a pretty far distance in Southern California. Yes, you know, I had to drive about an hour in the morning, an hour and a half home, in addition to grinding for 8 to 12 hours. So what I decided what to do is I said, hey, I want to be closer to the office. I'm going to have to figure something out. I found a 2-bedroom, 1-bath that was under market value. I think it was like $1,350 or something.
Back in here in a
Because they
second.
knew I lived so close, and sometimes, you know, I can go open the door for them. So it just came with those additional benefits. But I rented the other bedroom out on Airbnb, and I remember for the most part, I had no rental expenses because that bedroom was renting out every single night almost. It was in high demand. And what ended up happening was that I had a couple situations where they weren't the best, you know, Airbnb tenants. And, you know, some were a little bit loud, some were a little bit rowdy. I remember walking into one time where I was coming in and there was like 4 people in my living room, and there's only supposed to be 2 people in the bedroom. So I was like, what the hell's going on here? And they were just dropping off and checking in, and they were like family, but they were going to be leaving soon, but I didn't know this. And so you get these surprises, but again, I had no living expenses. So you have to kind of make some sacrifices, and it's not all going to be pretty, but at the end of the day, you are doing it for, you know, financial, some type of benefit down the road. And it was doing that for me. Another thing I want to note about that situation was because my housing expense was so low, I was able to travel regularly, even though I wasn't really making that much money working for these investors, because I was, you know, I was at a 10% and then 15% of the pie, but they were eating most of it. But it allowed me still like enjoy my life on the climb up, right? On that apprenticeship phase that we talk about, where I was paying my dues, but I was still enjoying, even though I wasn't making that much, but I was in the game and I was kind of house hacking, but renting. And then by doing all that, it allowed me to be in position to save more money. And then when I was ready to buy a property, I did something similar, and we'll talk about that later on in the episode here. But I just want to share with you how powerful it is to not only think about it in terms of buying a property, but also, you know, maybe renting a property and then getting you to that next level. Because so many times I see people that want to have a nice place in a nice part of town, and, you know, they don't want to sacrifice, but then yet, you know, they want to succeed. Well, sometimes you have to make those sacrifices, and then eventually you're going to be able to live in those ideal places. Like me living in Hawaii, I wouldn't be living here if I didn't employ that house hacking strategy. You guys follow me on all that?
Yes, completely. Could not agree more. House hacking, it is, the 101 beginning of investors. I don't know any people. I have tons of friends, family that are, this is the beginning steps to getting into real estate investing and becoming financial free. With that said, if I want to do house hacking, like where would I start? What are some first beginner tips as to what to do?
The first thing I think is identify what you qualify for, because you need to talk to a broker that understands what you're trying to do, or talk to a lender that understands what your goal is, which is, hey, I would like to buy a property that's a small multifamily, 2 to 4 units, and I would like to put the minimum amount down. How much can I qualify for? And that way they can run your numbers, and then you could be in the position to go out there and look for that property, whether that be on the market or off the market. I think that would be the first step, just kind of getting qualified. So many times we fall in love with the property, we don't even know if we could actually take it down and buy it through, financing. So I think that would be a first place to start. And then to begin thinking what neighborhoods you might be interested, because oftentimes if you're going to buy a property like a 2 to 4 unit, you might need to consider other areas of town that you didn't consider before, because you're going to be buying this property and then living in it. But at the same time, the goal is to eventually turn that into a rental. So maybe you're going to be living in an area like I just mentioned. I was living in Torrance, which, I mean, there's a lot of parts of Torrance, but I was not in the nice part. I was in the ghetto of Torrance, from Studio City, which is like one of the nicest parts of where I was living at. But I did it in terms of like taking that one step back, knowing I'm going to take 2 steps forward by making that sacrifice. So there's certain parts of South LA that I probably wouldn't live in as a house hack, and I wouldn't recommend. And then there's some parts of South LA I definitely would recommend that are great places to still live. But you need to identify those areas. And Southern California and a lot of these markets, there's a lot of different pockets of real estate. So get familiar with all those pockets to see, so you can shop around. And then remember, keep in mind, you're buying a 2 to 4 unit. So is that a duplex where they're right next to each other attached? Or do you want a for sure duplex where they're like separate houses? Or do you want, so identifying that too, of like, what's a kind of a killer, right? Maybe you have kids and you don't want to have like the tenant next door right next to you. Maybe so you want to have it detached. So identifying all that is really important too.
Yeah, and Alex, I mean, the property we did a meetup at earlier this past month, you have a duplex there that has the shared common wall. And so maybe that, to your point, is the deal killer. Maybe it's, hey, I want to have a duplex, but we have to have separate structures. And so knowing what you qualify for, knowing where you're looking, and knowing what you're looking for, I couldn't agree. Those are probably going to be 3 of the most important things when getting started off house hacking. Next most important thing, Alex, how much money do I need to get going? Like what amount of capital do I need to start house hacking?
Great question. One of my most popular IGTV videos is called House Hacking 101. So if you guys haven't checked that out, we'll put I don't know if we could pull up the link or whatnot, but I remember that's one of my most popular, because I break down the numbers of buying a duplex, triplex, and fourplex, and about how much capital you're going to need. But the formula is pretty simple. You need to have enough to put the minimum down payment, which is typically 3.5% to 5% down of the purchase price. And then you need to have some capital reserve, some type of savings, like 3 to 6 months, just depends on the size of maybe the building and how much your expenses are in savings, just in case of an emergency, something happening, right? And then you need to have any type of minimum repairs for the property, because typically we recommend that you guys buy something that might need a little bit of work, that might have some upside potential with, you can add some value, you can raise rents after improving the property. I don't really recommend buying a retail, completely rehab, vacant duplex that you're probably buying as somebody's flipping that. And, so you don't got that much upside potential with that deal compared to something like I just mentioned. So, that is, in my case, in my experience, has been between $20,000 to about $60,000 to fully execute a house hack 2 to 4 unit in Southern California. 20,000 would obviously be on the low end. You're buying a duplex, at the lowest price point. That doesn't need that much work compared to buying all the way a fourplex that maybe needs a little bit of work. You're probably gonna need in that range. So you don't need $100,000, but it's gonna be hard to do with just 5-10. Yeah.
Correct. And please note that, the numbers that Alex is running are in the LA area. So every market is different. Please keep that into factor. And then also, I think a good tip is knowing your in buyer and people, if you're going to be renting this out with yourself, and know what type of people, in that area or neighborhood would be your potential, rentor, rentee. I think those are really big, important factors, when you purchase these homes. Another thing, more tips, do's and do's nots for house hacking, things to, pros and then things to stay away from.
Yeah, for sure. Well, one thing about the do's and don'ts is I want to stress is that it goes back to what we talked about in the webinar a bit, where it's like you need to analyze deals, you guys. Run the numbers on multiple properties, because when you're analyzing, these small income properties, you need to add that layer of rents. So, hey, how much do one bedrooms go for in Whittier? How much does two bedroom go for in South LA? So these are things that you don't need to know on a single family, just a regular kind of transaction. But if you're buying a 2 to 4 unit, I mean, you need to know that. So analyzing enough deals to know, like, hey, I noticed this area, this type of, twos and 3 bedrooms are getting a lot. They're like getting like $500 more in rent than the 1 bedroom or singles. So I really want to try to find a duplex or triplex that has multiple 2 bedrooms. So you just start to see those things, and then keep in mind when you're analyzing these type of properties, you do need to analyze them also with like the income approach and also the sales approach, because there might be that approach where you find a duplex that's a solid comp that's very similar to your property, and then you have a triplex that isn't as similar, but it has the same amount of income. So you almost like are able to kind of analyze those numbers those type of properties 2 different ways. So I do want to stress it's almost like a hybrid where you need to understand that. So you got an understanding of what your real value is on the property. Right. And then I say don't buy somewhere that you're really not kind of comfortable living in, because that's the whole idea of a house hack. You're gonna live there. So like I said earlier, there's certain parts of Southern California I would not live. I don't care if you pay me. Like I would not want to live in those areas. Not many, but there is enough. And then there's areas where hey, you know what? I'm okay living here for like a year and a half, because I know this is going to help me increase my net worth. It's going to help me save, $30,000-$40,000 this year. And like you see the potential results, so you're willing to make that sacrifice, like I have.
Yeah.
And then keep in mind there is rent control areas of Southern California. Most of California is rent control, but there's certain areas that are and are not. So, like for example, if you're in the city of LA, that is rent control. But I think the city of Hawthorne is not rent control. So you just by being over in that city, you have the ability to pay a little bit more, because you have the ability to potentially relocate that tenant or increase the rent if you add value to the building more than in that city of LA as fixed rent control, 3% increase, whatnot. So I think you need to don't buy properties that are under rent control, that have these tenants that are paying significantly under market rent and have been there forever. All due respect to them, like those are not the ideal tenants that we want to inherit, and therefore it's not really. You need to reduce the purchase price on that scenario, and usually we can't reduce it by they're asking for $800,000 and you need to buy at $600,000 because the income is so low on the property. It just doesn't make sense for you to buy it. So just don't buy those properties that have those tenants with really low rents.
And guys, we're going to be evaluating and analyzing some deals here on the call. If we do have enough time at the end of the call, if you have a home that you've been looking at or maybe running the numbers on, maybe it's a dead lead that you thought might have been a house hack, but you kind of maybe now you're not so sure it is. If you're comfortable jumping on screen with us and we have enough time at the end, we'd love to do a deal analysis with somebody here on the call that's kind of looking at a house hack and see if we can kind of help you out on analyzing that deal. I know, Alex, you were talking about the fourplexes, the duplexes, and kind of the difference in income. Right now, the market just seems really, really competitive for duplexes. Do you have any other suggestions on how to go about doing a house hack here, especially in Los Angeles where it's so competitive?
Well, I mean, we've talked about this, but it bears repeating. You work with the listing agents directly. You start marketing to homeowners directly for those type of properties in your area. Because if you have a very specific area too that you want to buy in, there's not like there's going to be thousands and thousands of 2 to 4 units like there are houses. Sometimes there's a lower amount of inventory, but that also means you can do some marketing to that directly. So so I would say, you could also, and on the flip, if you don't want to do the duplex, you could also buy a single family house and convert the ADU, do that, or buy a single family house that has multiple bedrooms and then rent the bedrooms out. There's multiple ways of doing it if you can't get that duplex. And typically, you're gonna obviously pay less for a house than you are a duplex. So I would say those are a couple of, just suggestions based on, it is a competitive market.
All right, awesome. And with that said, in terms of, first house, are there any tips in terms of red flags to avoid for your first house hack? Sorry.
I think we've already said it. We don't. It's just those tenants that have been there an extremely long time, paying significantly under market rent in a rent control area. Those are like the kiss of death of deals usually, because it's like you almost can't relocate them. You can't do anything with them. They just have to raise the rents. They're renting a 2-bedroom that goes for $2,000 for like $800. And they're not gonna like relocate, and they're not. And if you take it to a rental judge, like they're gonna side with that person, and they're not gonna. So you could raise that rent, but say 3%. What's 3% of $800? It's like, I don't know, $24 or something like that. So it's like you could raise the rent $24 to this unit that market rent is $2,000. So again, it's like the kiss of death in those type of scenarios that you just can't do much with those.
Right.
That definitely does make it tough.
One more, and then remember, guys, we're thinking about in these. So a 2-bedroom and a 3-bedroom unit is typically going to have more upside potential than a 1-bedroom, 1-bath, or a studio. So just kind of be aware of that. If you're looking at a 4-plex, but they're all singles or they're all 1-bedrooms, there's only so much upside potential that property has. It doesn't mean that you can't. That's not a good deal, but then that means you have to live in a 1-bedroom, or all your other tenants are in a 1-bedroom. So just keep that in mind, because there's not as much upside potential for those kind of, they're called the unit mix, right? It's a 4-plex, but there's a 3-bedroom, 2-bath, and there's another 2-bedroom, 1-bath, and the other 2 are singles. So just keep the unit mix and the bedroom bathroom count in mind when you're evaluating these deals.
Perfect.
I know Tyler appreciates that. He was mentioning that he's looking at a 4-plex right now in Denver, where the current tenants are paying, way below fair market rent. So Alex, that definitely is a red flag. Stay away from those if you're not familiar with, how to deal with those kind of tenants. They are very, very difficult to get out because the circumstances are so favorable in their odds. So Alex, what I'd love to do now is go ahead and have you share your screen, and let's pull up a couple of deals here and look at some house hacks, see if we can find some numbers that make sense, and kind of give people an idea, again, just what it is that you're looking for when you're jumping on and analyzing these deals here.
4-plex in the city of Huntington Park. I have this auto search set up where any properties in LA County and any 4-plex is under $800,000. I want to look at that because it's under that $200,000 per door per unit metric that I like to use, or marker I like to use. So this one came up, hit my inbox. I looked at it, I'm like, oh, this looks like a good house hack. And then we decided to do a webinar on the house hack. So we're going to analyze this and show you guys why we think this is a decent deal. It might even go pending. It might have already gone pending because it's priced reasonably. And so this is in the city of Huntington Park. So like I said earlier, guys, you don't have, we'll just bring up the listing first. Yeah. And you don't have the same rental laws in this because this is a different jurisdiction. So could be a little bit more favorable there as well. Okay. So yeah, there you go. So if you look from an aerial view, it looks like there's 3 structures, right? Go back to the aerial view, Will. As a reminder, guys, we usually always start with the aerial view in case there's any deal killers, right? Right next to railroad tracks, directly in between 2 huge apartment buildings. Although that might not be a deal killer, but you get what I'm saying. Just anything that just puts it as just an automatic, like, no.
Right. Sometimes we also try to stay away from high schools as well. After school location, parks are pros, cons, like you said, railroad tracks.
Yeah. So we look down. I like that right away. You can see from the picture looks like there's a lot of parking That's decent. And then there's 3 structures. Now, from one side of things, that's good when you have separation, because like I mentioned before, if you're going to house hack, maybe you want to be in the 1 bedroom in the back unit, kind of looking down at your tenants. I know that sounds bad, but you get what I'm saying, where you got an eye on the property. So you got to imagine yourself living in the property and house hacking as well. And I would prefer to, have that situation compared to living directly next door we're sharing the walls and everything, like we mentioned earlier with Will. So now go ahead and go to the street view, if you don't mind. We'll go down there, take a look at the neighborhood, see, what the parking situation is like, right? That's part of the amenities that you're going to be providing your tenants in the other units. So you need to consider this. Curb appeal potential. If you zoom in just a little bit, Will, just so you can get a better feel. So, okay, so it looks like there's probably 1 unit, or could be 2 units in the front and then 1 unit.
Looks like there's a pathway right here that might separate that second unit. So yeah, it looks like there might be the first in the front and the second there in the back.
So it might be 2 units in the back on top of the garages, like 1 bedrooms or singles, and then 2 up front. So let's look at the listing and see if it provides any clarity on that, on the unit mix. Okay, there you go.
We got some clarity right here, guys. Looks like it's a 2 unit, 2 bedroom, 1 bath, and then 2 units, 1 bedroom, 1 bath. So like you said, Alex, probably those 1 bedroom, 1 baths are in the back on top of those garage, if I had to guess.
Yeah, and then also of note, if you look at the square footage, it says 2,783. So that's a decent size living footprint, right, for 4 units, as opposed to like a duplex that's 1,000 square feet. It's like, okay, well, those are like 500 square foot units. So all these are little data points that you need to be thinking about, because again, you're going to be living in this property. The lot size is also decent for South LA, 548. That's a decent lot size. Now keep in mind, year built 1923. There can be some very old systems here, so we probably need to definitely have just a lot more clarity on the rehab on this, because those older, that's almost 100-year-old building, or 3
now
buildings,
Alex, when
right?
you say systems, what do you mean by that? You mean plumbing, electrical, major systems?
The first thing I think about when I think of 1920s year built, I think about foundation, because the way they built foundations back then is not as robust as it is now, obviously. So that might need some foundation repair in 1 or more of the units. It might need, like I said, upgrading of electrical, because it might be that old tube and wiring, all that, and that might be costly because it's multiple units. So just keeping that in mind is something important, because this property obviously needs some work. Now let's go down a little bit so we can see the listing where it describes how much income is currently being generated from the property. Now, it doesn't say, because I think it said it in the
description. Yep.
Right. Okay. So let's look at those numbers real quick. Right. So 2 of the units are collecting 1,400, and then the 2 of the 1 bedrooms are collecting 850. So what is that? 2,800 plus 1,700 is, I think, 4,500.
3,500.
I'm sorry, 3,500. I'm sorry, guys. My math is off today. Had a lot of numbers this morning. Okay, so it's $3,500.
No, my bad. That would be 4,500. My bad.
Thank you, Will.
That's my math that was off.
Okay, so 4,500 in total gross income now, not including any expenses that the landlord incurs, like utilities. So we'll have to determine that. But 4,500, we would need to reduce that because you're going to be taking over 1 of those units. So let's say you're taking over one of the units that's 1 bedroom, 1 bath. So now we reduce that 4,500 by $850, which gets us somewhere around $3,650. Okay, yeah, $3,650 now is that. So what's the mortgage payment going to look like? Now we go back up, we look at the asking price, $765. Remember, it's less than $200,000 per door, but the property does need some work. So we need to kind of calculate this right here. So let's say we could actually pay asking. What would the mortgage payment be? Let me get my mortgage calculator. I forgot it in the.
And guys, what Alex is going to do is he's going to figure out what the mortgage payment is, because remember, you are now going to be taking some of that rent back. And what that means is sometimes you'll not have a full mortgage payment. You are going to have to come out of your pocket and pay some of that rent. But really, you're paying a smaller amount of rent because everybody in your building, they're also helping you pay that mortgage payment. So Alex is going to just run a calculator real quick and see if we were to buy this at 3.5% down,
Yeah,
what would our mortgage payment be, Alex?
At $765,000, you guys, at 3.5% of that would be $26,000, right? 26,775, but let's just say 26, right? And therefore, your, what you're looking for is how much is your loan amount going to be? Again, we're going to try to keep numbers real simple so you guys get an idea. So your loan amount is going to be somewhere around 740. Okay. Current rates right now are around 3%. 30-year term, 3%. So your mortgage payment on that property, just principal interest, will be about $3,100. With your taxes and insurance, you're going to be paying somewhere about $4,000 to $4,200. Now, you're now paying about $500 to $700 out of your pocket, but now you own this fourplex. And with $26,000 plus your living expenses, you're looking at somewhere around another, call that another 20 grand or so. So like I mentioned earlier, you could buy this property with about $45,000, $50,000. You maybe want to have a little bit more because you're going to need to do some work, but you could technically get into this property for somewhere around that. And then you would only be paying monthly the difference between the $3,650 that we know we're going to be collecting in rents now without any increase, and then what your mortgage payment is in the low 4,000s. So that is a pretty, now imagine if you got it a fourplex for like $700,000. You start playing with those numbers, you could actually be breaking even, or maybe even profiting just based on the numbers, like what you buy the property at, what you're getting in rents. So you guys are beginning to see the power here where, and then eventually when you refinance that, you're going to be reducing your payment likely by about $500 to $700 a year and a half down the road. So then now you're breaking even, or if you turn that into a rental, you could actually be profiting like $1,000, $1,500. I hope I'm not going too fast for you guys, but you guys seeing the power here of having the house hacking strategy. And this is just a normal listing that hit the MLS. You could do a lot more if you do some off-market stuff, or get a good deal from an agent, because you're letting people know what you're looking for: a triplex, fourplex, something, a house hack at a decent price. Because you can pay more than an investor. I would need to buy this property probably in the high 600s for it to make sense as a cash purchase, or mid 600s. So that's almost probably $100,000 off of this price for it to make sense, which is just unlikely. They're unlikely to sell me that property. But you as a buyer, as a house hacker, could buy this property likely around asking or a little bit below.
And Alex, the one thing I really like that you pointed out there is, again, curb appeal on the property. You want to make sure that's a property that you'd live in. So taking that into consideration, guys, like, Alex was living in Studio City and said, hey man, this is something that I'm going to want to do. I'm going to want to make this sacrifice, and maybe I will live above a garage. Maybe it's a garage that I rent to a tenant. Maybe I will make those couple of sacrifices because he saw that upside, he saw the future, and said, hey, if I take this one step backwards right now, maybe that's going to put me those 2 steps forward in the future. So, keep that in mind as well.
Let's also look at the rents. Remember, we use rental meter. So if you could log into rental meter, well, maybe we could bring up the rents on the property and to get an idea of maybe they're under market. So we're raising them 3%, and 3% on 3,650 is somewhere around $109. So we could be raising the rent $109 every year. In addition to us potentially reducing our mortgage payment by refinancing, and also maybe we could also potentially rent out one of those garages for say $200 as well, because if you could see down the driveway, there's a couple of garages in the property as well. So there's other ways you can get income from the property that, again, you probably can't do that if you're just buying a regular house. In a house hack and you're thinking income, maybe you don't need that extra, garage, and you rent that out, or maybe even 2 of them, because you're just not going to use them. You're going to be driving in and out, and you don't need that storage space.
Yeah, and those are other ways that you can, like you said, maximize the rent on that property. So maybe it's, you are going to be living in one of the units, so you aren't going to be able to make as much on that unit, but because you are able to, rent out some of the extra spaces, it is going to allow you to kind of say, hey, I can make some of that money back here.
Yeah, and in fourplexes and triplexes, you could also add washer and dryers. to like, maybe a little laundry room, because a lot of times in these entry level areas, people are going to laundromats to wash their clothes, bottom line. So if you're providing that amenity and have those washer dryers and collecting you some money, then that's another maybe $100 a month that you're making off of that. There's all these little ways on these small multifamily that you can make more money, increase the income, reduce your expenses, you're saving more money. It just all compounds compared to just buying a house to buy a house, and then you got this heavy overhead and no real upside potential there aside from appreciation, which it just, you don't have any real control over that. You have control over whether you can buy washer and dryers even if they're used and make the install, make that area for your small building. But did you bring that up, Will?
Yes, sir. We got it up right here for you guys. This is the rentometer. Hopefully you guys are able to see my screen here. So this is for the 6301 Newell Street. It's a 1 to 4 bedroom summary. So you can see here the average rents for the 1 bedroom, 2 bedroom, 3 bedroom, or 4 bedroom in this neighborhood. You can see that we are severely under those asking prices. So at $850 for that 1-1, that's coming in at least 500 under what normal is in that area. And even those 1450s, those are going to be about $400 under market rent for the area as well.
Yeah, so you can tell right here, you guys, that there's a lot of room for upside potential. And then I don't know the exact rental laws in Huntington Park, but that would be part of my due diligence as a buyer, house hacker. I would, go down to the city or email the city. I would find out. You guys, when you're buying real estate, you have the ability to go to these municipalities, these cities, and ask for information. Part of our tax dollars pays these people's salaries and the infrastructure for these cities. So you are allowed to go in there and ask questions and and just get information that's going to help you make decisions on your, real estate investment deals or real estate purchases. And that's one thing, as when I was first starting out, that at first I felt intimidated going into these cities, asking these questions, but no, like they're there to help. Some are more helpful than others, but you begin to develop that skill set of going into these cities and almost just, again, entitled, because like, hey, I want to know information. I'm going to potentially park $40,000, $50,000 of my money in this city. I want to know, what's going on here. I want to know what you guys want for these type of properties. I want to know if there's any code violations for this property. I want to know, what you guys expect for me as a property owner in this potential city. So these are, again, questions you can ask as part of due diligence when you're buying property.
So Alex, this was a great property to look at. Let's switch gears and take a look at another deal here real quick. Yep. Let's look back here and same thing, guys. We always tend to kind of search within a close proximity of the property that we're looking at. This next deal that we're going to look at, Alex, is up in Highland. So, what are some of the differences maybe between a listing in Highland and one down here in Los Angeles?
So shout out to all my people in the IE. We wanted to show some love. We're still looking to do deals in IE. So if anybody's on the Colony Wholesalers, we're trying to do our something out there this year. We're predominantly buying in LA County, but we love IE. So San Bernardino. So this is Highland. Definitely a like entry level area of that east part of Southern California. And so these areas, you're going to see that obviously the rents are going to be a lot less, but also the purchase price is going to be a lot less. And the rehabs are likely going to be less because the property is a little bit newer. But you are probably going to have to commute for work, or you're going to have a different type of tenant pool, right? Whenever we're thinking like real estate investing, you need to be thinking about tenant pool, buyer pool, like how many people want to rent from me? How many people want to potentially buy this property once I finish it, right? And so we bring this one up, 3311 Highland Avenue. It looks like it's off of a main street, which isn't an immediate deal killer, but it is something to note. And then it does look like is that?
Looks like a hospital directly across the street.
Okay. So just something to note. Obviously, we probably want to go to the street map there. In these more rural areas, how close are we to the freeway would be something I would want to know. Just because since they are typically going to be a little bit more commuter cities, we probably want to check in on that and see, that, right? So,
kind Got the 210 right nearby.
Yeah.
Foothill
There you
Freeway.
go. Okay, not too far from the freeway on ramp exit for the tenants. Now zoom in on the building a little bit.
You can
We
see the two
definitely-
addresses here, one in the back and one in the front. So it's definitely separated, two separate units.
And then what do you guys notice there about the lot?
It's got all this empty usable space right over here as well.
Absolutely. What can we do with that space? Can we add more units? Part of that due diligence, can we do that? A lot of these, property owners, they're not really thinking like this. They're just like, they've owned the property for a long time. They've been cash flowing on it. They bought it super cheap. But now with development being a lot more, it's just easier overall because there's more technology, more systems in place, more people you can reach out to and get that information. But and the simple is you could provide some type of yard and then charge for that now, higher rent, because now you're providing another amenity or fenced in yard or something like that. So
It looks like ours does have a fence.
Okay.
Fence runs all the way down the property right here.
Yeah. Can you go down that street right there a little bit? So you're zoom in. Yeah.
So this looks like our property right here with the property in the back as well.
Yeah, so definitely, again, storage sheds or provide some of housing. It's a fourplex, right?
Let's take a look at the listing.
Okay, yeah.
So we're looking at a 4-unit mix.
You see, guys, it's almost half the price. Go back up. Will, I can't see the price. It's $438,000. There's only 3 pictures, so we don't have a lot, but it does have a decent lot, like we're noticing. Great opportunity for homeowner investment, live in one and rent out the others, right? I mean, so they're already pitching it as
They're pitching the house hack.
So you guys, whenever you're looking at listings, that's the way that description is pitching. That agent is pitching that deal to the world by that description. So whenever I see it says perfect for first-time homebuyer family, it's probably not going to be a flip opportunity for me. But when I see investor special, contractor special, then typically it's going to be more geared to that type of listing. So anyway, you see the year built, you guys, 1958. It's a little bit newer than our other property we're looking at. So go down, Will, please, and let's look at the rents. So remember I was telling you guys before, looks like they're all 1-bedroom, 1-bath units. They're all collecting 600. Pro forma shows 800. Do we want to maybe plug in the address over there to the rentometer and see if it agrees with those numbers? I also use Craigslist, you guys, just to get an idea. So we use rentometer and Craigslist to get an idea for rental rates in Southern California generally. Okay, so that says it's a little bit, so that could be a little bit low. So maybe we can get 900. We might want to look at Craigslist. We might not have the time now, but you guys get the idea. You need multiple price points, and really depends on what the unit looks like and what amenities the unit has. Just like when you're comparing one flip house to another flip house, you're trying to find a like for like. You're trying to find rental comps, right? Like, okay, I can produce this rental comp, and I know I can probably get $950 for this, but I'm gonna have to invest another $3,800 per unit to provide that, that fencing yard, provide maybe a washer dryer, like I said earlier, provide some type of storage. So these are things that you're thinking about that you're not thinking about when you're just buying a regular house. You're thinking as an investor. So, all right, so let's do the numbers on this real quick. Let's say we want to offer like 420, okay? If we're going to offer 420, 3.5% of that is going to be $14,700 down payment to buy the property. If your living expenses are somewhere around $3,000 to $5,000, you're going to need, again, 3 to 5 months living expenses. So we're going to add at least another $10,000 for just overall living expenses at pad. And then it looks like you probably need some work. We could add another $10,000 in work. So you're going to probably need somewhere around $34,000 to buy this property, somewhere thereabouts. Your monthly mortgage payment on a 30-year fixed, 30% is going to be $1,700 plus taxes and insurance. So you're looking somewhere around $2,600, $2,700. And then what is it collecting right now? The other 3 units would be 6 times 3. So it'd be $1,800 you're getting right now, somewhere, right? 6 times 3, because you're occupying the other unit. So if your mortgage payment is $2,700 all in, and then you're getting 6 times 3, $1,800. So now your monthly expenses are $900. Now, Not as good as the last situation. That one was like $500, and you're living in, I guess in South LA. Most would think that that has a little bit more upside potential, but maybe we offer 300 or 400, right? Maybe we offer 395. I'm just giving an example of offering close to asking, but maybe this thing's a deal at 380, 390. So we look at that because maybe you don't want to pay that much out of pocket. Like that's close to $1,000 to live over here in Highland. Maybe you don't want to do that, but maybe you're willing to pay $500 and you work the numbers so that way that's where you're at. And then also if there isn't any rental laws like it is in LA, you could probably rehab that unit and relocate those tenants and raise those all the way up to $1,000. And if you're getting $2,000 plus 2,600, so you could theoretically be breaking even on that property within 3 to 5 months of owning that property if you make the right moves. So that could be a strategy of like, hey, maybe my first month or two I'm paying about $1,000 out of pocket, but with the end goal of breaking even fairly soon. Does that all make sense, guys?
Yeah, it's amazing, crystal clear, and hopefully people are taking notes with this.
Okay, cool. Let me know if you guys are getting some value from this. I'm just looking at like if I was buying this property, what the numbers would look like, just so you guys get an idea of like how to analyze the deal. Also, I'm happy to call these agents and ask more information if you guys have questions or whatnot, because part of it is engaging with the listing agent. We haven't done
Let's
that.
do it. Let's do it, Alex. Let's
Let's
get this
good
agent
idea.
on the line right here and see if we can get him on the phone and get Mr. Camacho talking and getting some info from these guys.
All right, let's get Cindy Loy on the phone. Let's see what she's talking about. She's trying to get us a good deal and make some money. Let's go.
You guys, yes, let's go.
All right, I'm going to call on speaker.
Okay. If you have any questions or anything, feel free to ask.
Hi, Cindy.
Yes.
Hi, this is Alex. I'm calling about your listing, your fourplex in Highland.
Mm-hmm.
Yeah, is it a bad time?
No.
Okay. The reason for my call is because are those all 4 units currently occupied, or are they vacant? What's a tenant situation?
It's all occupied, and tenant is paying rent, and tenant is all month to month.
Okay. Are they all long-term tenants? Have they all been there at least 2 years?
It's over 2 years.
Okay, got you. Because I'm looking to buy for me to live, kind of like, rent out the other 3 units to pay my mortgage. So I don't have an agent. I'm just a buyer. Now, do you think the property needs a lot of work? It looks like is there any major systems? Like, what is the major issues have you seen with the property? I'm just kind of curious on the amount of deferred maintenance or work that the property you think needs.
We don't have any major problem on that, but it really depends on person by person. And all you need to do is just remodel a little bit, and then you can stay in there, because the roof has changed like 2 years ago, and everything is good.
Okay. Are any of the units bigger? If I was going to live in one, or are they all the same size?
They are the same size.
Okay, got you. Okay. And do you know if I could raise the rent by like 3% or 5% every year? Do you know that?
Well, that I don't know, because I don't do property management, so I'm not familiar with the 3%, 5%. That I don't know. So maybe you have to have some professional to ask, because especially right now, this moment, it's hard for you to raise the rent.
Yeah, well, I'm just trying to reduce my mortgage payment. After analyzing the numbers, I think that I could come in somewhere around 380, 385. And you write the offer. Do you think that that's something the seller might entertain?
No, they're not going to work, because seller is expecting full price.
So what is the offers looking like right now that you have?
I have cash offer for 430. I have a lot of offer for 440.
You have a cash offer at 430 and he doesn't want to accept it?
Yes. We might accept it.
Oh, okay. All right, well, let me run my numbers again. Are you showing the property at all, or is it just all subject to interior inspection? Or what does that look like?
We've been showing the property 2 or twice last week. That's why we accept that many offer. but if you want to see, just let me know. So I can have the manager go out and show it to you, but I don't know if we accepting our offer and then we're not going to show it anymore.
Okay. Well, I'm looking at a couple of properties. I appreciate your time. I'm going to call you back if I want to look at the property. So do you have any other investment properties that are coming up or anything else that might be an investment deal?
No, not on this price. Not on this price. I don't have any investment on this price. I have a lot higher than this price.
Okay. And then what area do you typically cover? What's like the area super, super well? What's your area of expertise?
I'm doing San Gabriel Valley Mall.
San Gabriel Valley. Okay. All right. Well, hey, I appreciate your time. I'll swing back around and call you back if I want to look at the property, but best of luck either way.
Thank you.
All right, you guys.
Great questions, Alex. Again, just kind of really hammering home on getting the clarification on the tenant mix, the unit sizes, the conditions of them, just even asking the realtor, like, hey, what would you do in this? Like, would you take one of the rooms over another? It gets them giving you that information. And I know I'm looking at the chat right now and everybody's saying this was awesome, this was good, this was great. Yes, guys, we will have a replay of this available. Alex, if you don't mind, let's go ahead and call the agent on the other listing as well.
Not
just
at
so we
all.
can
This is
kick
fun.
the rocks
I'm
there.
excited. Let's go.
Alex kills it on the phone.
I love calling these agents because you guys see, you have to ask a lot of questions. I mean, they're the ones in charge of the deal. So you feel free. Once you've told them, hey, I'm the buyer, like I don't even have an agent, like you're really free to ask almost anything. So that's what I'm trying to show you guys.
You're in the driver's seat, Alex. You're the one who's cutting them a check, right? So if you're cutting them a check, they should be willing to help you out and get some information for you and at least give you some feedback on what you're thinking to make sure, hey, is what I'm thinking correct or am I completely out of the dark here? If I wanted to live in one of these, they might respond back to you and go, hey man, you definitely don't want to live in one of these. These, are not in good condition. You need to do a lot of work, and that'll give you that insight when you're making your offer. So I love how you also use the range there, Alex, just kind of giving her a range and seeing, is this something that they would consider in this range? This is where I would need to be. And that gives you a good guidepost or a benchmark on where you need to go with your follow-up offer.
Yeah, and then when she said they had these multiple offers, I'm like, you had a 430 offer in cash and you haven't accepted it? And she's like, yeah, probably gonna accept that one. So don't be afraid to ask, like, what other offers are on the table? You're interested in making an offer on the property, so you have some value to give, but you want to know like what you're up against. And so I'm never afraid of asking them these tough questions, because that's how you get the answers you need to make decisions on these deals. So let's go.
Yeah, she said they're waiting for, that they wouldn't consider an offer in that range. And so you counter, okay, well, what offers do you have? And if they're asking for 438 and they have a cash offer at 430 and offers at 440, then that's your next question, is like, so why haven't you accepted one of those? And I love that Alex pushed that button and said, hey, we need to know, like, why haven't you accepted? And that's a great clarification question there. So let's get Annabella on the line and let's ask about Huntington.
Let me read the listing in its entirety. So start at the top. Okay, go down. Okay, go down, please. All right, Annabella.
Hello.
Hi, Annabella.
Hi.
How are you?
Good, and yourself?
I'm doing amazing. My name is Alex. I'm a buyer. I'm interested in Newell Street. Is it a bad time?
No. How can I help you, Alex?
Well, real quickly. So are all the units occupied right now and paying rent on time?
Yes, they're all occupied. They each pay $1,400, the 2 bedrooms, and then the 1 bedroom they pay.
Are the 1 bedrooms in the back of the units, and then the two structures in the front are the 2 bedrooms?
I don't know where they are. I don't know where they're located. I haven't done a walkthrough on the property. I'm sorry.
Oh, no problem, no problem. And so when are you guys reviewing offers? Because I'm interested in making an offer.
Next week, latest next week, maybe by next Friday, a week from now.
Okay. Do you, anything, because I don't have an agent. I'm looking to buy a property that I could live in and then, rent out the other 3 units. But this will
be perfect for you.
Yeah, and I don't have, I'm pretty handy, so I could get the work done. It looks like it needs work. I think I could pay asking, but it's a little bit tight. So what type of?
You know what? And this one's not going to work for you because there's offers that's stronger that are not at even cash above asking.
So you have cash offers over asking right now?
Mm-hmm.
Okay.
Yeah, because those properties, once you rehab them, they're worth about 1.1, 1.2. That's how much they're going in the market.
Yeah. Did you know if we could raise the rents on the other units by a certain amount? Because the city of LA has different rental laws than Huntington Park. Do you know any of that?
Correct. Huntington Park, as far as I know, has no rent control.
Okay, so then theoretically, I could rehab the other units and then raise the rents and the value of the property would go up, right?
Yes.
Okay, awesome. But if I paid somewhere closer to 800, because my budget's around 800, honestly, but I just don't want.
That'll work.
Okay. So let me do this. Let me run some numbers more. You're gonna make a decision next week. I need to drive by. I need to drive by the property just so I can see the neighborhood a little bit more. What do you think? What do you think the rents would be though on the 2 bedrooms and the 1 bedrooms, like if they were completely remodeled? Do you have any idea?
If there were, the 2 bedrooms would be about 2,100 just to be on the safe side, and then the 1 bedrooms are 1,800.
Okay, gotcha.
Okay.
All right, so let me do this. Let me look at my numbers, and then I'll get back with you with any other questions and to make an offer.
Okay, thank you.
Thank you,
Bye.
Annabella. Have a great day.
You too. Bye-bye.
Let's go.
Another
Mic
legit
drop.
call right there. Alex, just real quick, we got a couple questions coming in.
Okay.
People are kind of wondering here, is there anything to be wary about when you're asking that agent to represent you on an offer? This is a question from Chris. And then Dizu followed up with, if they're writing your offer, are they also incentivized to help you with your strategy? So that's that kind of dual agency approach, if you don't mind answering those questions.
Let me answer the first question. The first thing you want to be worried about is not playing your cards too soon. Simply by you making the phone call to the listing agent and telling them like, hey, I'm a buyer, like just that says enough. You know what I mean? Like, let's have a conversation from you being an agent and I'm a buyer, compared to like, oh, my agent's calling, hey, this is a broker call. I'm calling, I have a client that's interested in this property. And, kind of almost like by the very conversation you're having, it's implying that, hey, you might be able to write the offer, but I don't like to play that card too quickly in the conversation because it's one of your best cards. So use it wisely. And then it's almost like you want to get the listing agent to assume that they're going to write your offer or ask you like, hey, do you mind if I write you the offer? Then they're a greedy listing agent, and that's a good thing, typically, for what we're trying to do. And then on the other one, yes, when they're accepting you as a buyer as writing your offer, theoretically, they should be representing you and hopefully trying to get you a good deal too. So it's a very slippery slope of, honestly, I have a lot of conversations with listing agents where I'm like, I mean, are you really like trying to represent your seller and like but hey, I'm just trying to get a good deal. But it is difficult to like represent the buyer and the seller and then make sure that they all get a good deal. But you'll also have those agents that are like, they're writing your offer, but they don't really care about you. They ain't trying to get you a deal. They just want to close the deal and make the most money possible so they can give 2 shits whether you get a good deal or not. So you got to kind of be aware of that too. Those greedy agents that like are just telling you to come up in price, but just so they can have a for sure paycheck on that side of things too, but they don't really care whether the numbers work. But you see with her, she knew the numbers. I don't think that it would be worth 1.1 million, but I do think that it could be worth about $1 million if the rents were maximized on that property. So you do see some upside potential on that. Compared, you think that property in Highland has the same amount of upside potential? Not really, because there's no rent control in Huntington Park. There's no rent control in Hawthorne. There's certain municipalities and cities across SoCal that don't have the rent control that just have different upside potential compared to a property that does have rent control. Yeah. This is fun, you guys. Let's go.
So Alex, what I'd love to do now is, we had Renee reach out, and Renee's got a lead that he wants to kind of, kick the tires with on us real quick. So we're going to go ahead and bring Renee onto the screen here. And Renee, if you have your address ready, what we'd love to do is kind of take a look, and we'll go ahead and pull your address up here on the screen share and review that with everybody as well.
Hello, welcome.
What's up, Renee? The guy with the $1 million mustache. I'm gonna call you.
Hey. Caught me sitting in my car here.
So Renee, I was looking up in the chat and I lost the address that you gave us. Are you able to give me that address again here?
Yeah.
Oh no, I got it right here in Topanga Hills.
Yep. It's
so
4954.
Pull up this listing here. Renee, do you want to give us some insight on this thing? Like what you kind of know about it?
Yeah, so it's the 2-unit has the rental unit above the garage. It's a 2-bedroom, 1 bath, and a little kitchenette that's above the garage. And then the front house is a 3-bedroom, 2 bath. And that's kind of what I got on it right now. They're asking $7,995, and the rent in that area, as far as rental meter goes, they're looking at anything around $2,000 for a 1-bedroom. For a studio is about 15.
Got it. And so just right off the bat, you can see here, again, freshly listed. So, kind of taking a look at this house, like we always like to do, we like to kind of take a look at the Google Maps view and just kind of see what is it that we're dealing with, what's around us in this neighborhood. Is there anything that we need to kind of be careful of or be aware of or wary of? Is there a school nearby? Is there a freeway, an overpass that's directly in our surrounding neighborhood? And, when you look at this looks like it's got this Topanga Canyon Boulevard right here. And it is the first house kind of right off of that corner. So it is going to be on a main street, which isn't necessarily a deal killer. It does have access to a side street as well. So it looks like it'll be a little bit quieter over there. And from the looks of this, it does look like it is 2 separate units. So let's see if we can get a street view over here and kind of take a look at what we're looking at on the street. It looks like it's this house right here, just kind of guessing from the listing. It kind of had that, look right there with the windows and everything. So I think this is us right here. And again, we're going to have main access to this main street as well. So you can see it's right here. It looks like it's protected, pretty well hidden from street view. Let's dive into here. And Renee, tell us, when you were looking at this property, what was it that kind of stood out to you?
Well, the first thing for me is the area. The school systems around there are nice. I'm looking to move into the front unit with my family. So the area, the upside of the area as far as equity growth, I think in the next couple of years, obviously that's speculative, but I think the next couple of years for sure that area is going to be going for a lot more. Then also the rental was kind of a big thing. The back, being that it was detached, wasn't attached to the front unit, completely separate entrance, where they enter through the side of the garage, so I won't really ever have to see them or whatnot. That was a plus. And the fact that the front house didn't need much work. It's kind of already ready to go.
Yeah, it's move-in ready. It's retail ready. It's beautiful.
Yeah, I mean, looking here at the pictures, this looks like a pretty beautiful home. And, again, knowing that you're going to have that other unit in the back that's going to help you with your mortgage payment. That's what a house hack is, guys, is it doesn't matter if you're going for a little bit of a nicer area or, like Alex was mentioning when he moved down to Torrance, you're looking for somewhere where you can live in that property and have something else offset the rental, the income that you're going to have to pay. And so, Renee, it looks like you kind of looked at this house in terms of you occupying the front house. And
Sure.
When you were looking at this, did you take a look at the rents in this area? I think you had mentioned earlier, what are rents going for?
Yeah, so the 2-bedroom on the rental meter goes for about 21 to 22. And then the 1-bedrooms go for about 18. And currently, so here's the kicker though. This is kind of the red flag that kind of put a little bit of concern. The unit in the back is actually rented right now to an elderly woman with a disabled son. So that's kind of like the double whammy red flag of potentially really hard to get them out if necessary. So that was kind of the downside of it.
One thing you can always do is you can just try showing them that mustache and just letting them know, like, hey man, I mean business. And I mean, if you came walking into the house, I would probably listen to that offer coming from that mustache. But looking here, again, knowing that tenant in the back unit is an elderly woman with a disabled son. Alex, kind of always mentions that those are the kiss of death on a deal sometimes is long-term tenant with disabilities paying below market rent.
Older.
So that really kind of limits your upside. You can pay, the rent in the front unit, but really you want that back unit to be helping out and contributing towards your mortgage payment. And if they're at a lower rent already, and they've been there at that lower rent, it's going to be, significantly harder for you to increase that rent to help offset what you're paying.
Right.
Yeah, I'm sorry, guys. I had a little bit of technical difficulties, but fill me in.
Oh no.
So yeah, this is Renee's deal and a beautiful home here up in Woodland Hills area. Alex, the reason he looked at it is it has this back entrance. So it's got two separate units and, you know, really clean front house that Renee would be willing to move into. You know, he just kind of found that the red flag, and this is what turned him off on this property, is that again, the back unit here, it does have that long-term tenant. And you know, nobody wants to be the person that pushes somebody out of their unit or out of their home, and so that kind of put Renee in a tough situation there.
Gotcha.
And they currently pay $18.75, so it's not too far below, and it does need work. So if even if they were to get out, I would still have to put in some work to get that top dollar for it. But they're month to month. I don't know if that's a good thing or a bad thing. And she supposedly is on her way out as far as looking for a condo to buy. But this is all, you know, stuff that the realtor's telling me. I don't have any rent rolls. I don't know if they're paying that, if they've been paying it on time, anything like that.
Well, it's anything in the San Fernando Valley is technically the city of LA. So it does apply to rental laws, city of LA. And even though it's a single family house, if they have another unit they're renting, that turns into a rent control property essentially in the eyes of a rental, law judge. You know, if it went to court in rental law, it would lean towards the tenant. So I would just appraise it based on what would work based on the current rents, because you're not going to be able to increase it more than 3%. And even though it's month to month, but they've been in there long term, so you know it'd be good if it's like month to month, but they've only been there 1 year. Then now it's okay. They've been there 1 year and it's 1 month to month, at least in a rental, a rental situation where it's rent control. But on this house here, what's the rent amount?
The rent she's paying $18.75.
You're kind of low, Renee. Can you make sure you speak up?
She's paying $18.75.
$18.75. Okay, so I mean that's a decent amount for that type of property, but I just it's on the main street. It looks like it's kind of in a good condition. I don't know. I see this work.
Here's the other thing. What do you think about this? The rental unit isn't actually permitted. It was supposed to be a rec room, and then they added this janky kind of like little kitchenette and bathroom to it.
Yeah, well then that's you could leave yourself open to issues there, because then that tenant, if you rub her the wrong way, or she wants to be a bitch, or she turns on you, which I'm telling you, tenants will turn on you in like this, for any little thing. So they turn on you, and then she can call the rental board. She can call all types of the city involved and get them involved. And now you got this red flag, and she doesn't have to pay rent. I mean, it's just all types of stuff can go wrong with that. So I would not want to inherit. I would not want to inherit a unpermitted tenant, property that's unpermitted, and a tenant in there paying under market rent. That's a recipe for disaster.
Yeah. So would you put in a deal, something like this, with the contingency of them being out?
Yeah, I would just try to get the vacant. Just like I need a vacant because I'm gonna be moving my grandmother in there.
Right. Yeah, that's the card I was thinking too.
Family.
And submit that with your offer and let them know, like, hey, I would need this, the back unit delivered vacant. You mentioned that the tenant was looking at a condo. Maybe we can help her out with a little down payment on her condo to help her out with that process.
That's good. Yeah.
So Renee, again, appreciate you jumping on here.
You could also make the offer as cash for keys included. So, I'm going to offer, $775,000 and with $10,000 to her as cash for keys to relocate her. And then we want a 45, 60-day escrow. So you have enough time to relocate her and give her the money and find the place. And now you're still, as long your numbers still work out, and then you're getting a vacant. And then you could permit it, get it legalized, or do whatever you need to do. Or like I said, rent it to a really good friend, or rent it to or give it, to family, whatever you plan on doing. But it just, you want that scenario vacant. You want that property vacant if it's unpermitted over inheriting a long-term tenant in an unpermitted space.
Yeah. Good call. Thank you, guys.
Yes.
Definitely makes it tough.
Good luck.
Yeah, Renee, appreciate you jumping on here and sharing. Definitely, be safe if you're driving around that guy. That's a mean mustache to come driving up next to you on the road right there, right?
Hopefully it works out in your best favor.
Yeah, again, I appreciate you you jumping into it here with us, Renee. Thanks so much.
For sure.
We're going to bring on one more guest here real quick. Raul also has a deal to look at real quick. This is going to be Raul Guzman. He has a deal to look at real quick that he wanted to share with us, and he kind of put that in there in the chat. Looks like it's going to be 716 Alameda Street. So let's pull that up on over here. And good to hear from you, Raul and Jessica here. Good to see you guys.
It's like, sorry, just Jessica here. I'll have to get on a call right now.
No worries. So let's, I'm going to share my screen, and you guys should be able to see here on the screen. This is going to be 716 Alameda, correct?
Yes.
And if you don't mind, just filling Alex in a little bit on the deal. What do we kind of need to know about it? What's going on here with this? And this is in Los Angeles or Vallejo?
Vallejo. So I'm from the Bay Area. So we were looking for a house hack. This is one that we came across on Realtor and Redfin. So it's a 3-bedroom, 1 house. The main house has that, but then it has like an unpermitted ADU below. That's like a studio. So that kind of caught our attention. Like, okay, you can live in one, rent out the other. It was a little under 500,000. So our payment calc came out to about 2,700 a month. When we ran the check on the 3-1 unit, it could rent out for about like 2,100.
Okay.
The studio rent was about like 1,100, but given that we would have to live in one of the units, since we would do like the 5% conventional for the primary house, we would still have to pay some of the mortgage out of pocket, which was fine. But just looking at the studio, we were willing to live there, but the 3-1 we just thought would be a lot harder to rent, since it's, if we do either rent by the room or a family. We've lived in a house with 1 bedroom, 1 bathroom, and it's just so hard to like navigate through that. So yeah,
and I love what you're saying already, Jessica, because you know your end avatar. And Alex always talks about this, knowing that end buyer, knowing that end renter. If you know that a group of people isn't going to share 1 bathroom, it's going to be really hard to do that.
Exactly.
And that's where you almost want to know, like, is this a building where if you look on here, is there a place where we can add that extra bathroom? Can we add some value into this property once we vacate it? Are we able to, rehab it? And that's what Alex and I are always looking for, is those homes that we can add some value to in the process of turning it over. So were you able to get inside of it at all? Is the unit vacant?
No, so we ended up skipping on it just for those reasons. Since the market in the Bay Area is like really hot. We ran numbers and decided a single family house rent by the room would just work a lot better. So
looking at this particular deal, what was your kind of the deal killer? Was it the ADU in the back just wasn't a big enough size, or was it the rent wasn't going to be enough of an offset? What was it that kind of turned you to the kiss of death, as Alex likes to call it?
I think it was the rent that wouldn't be as much of an offset. Ideally, we don't want to be paying any of our mortgage. So the rent by the room is what ended up working for us.
Well, that brings us into a great point. I'd love to bring in the rest of the room here and kind of get everybody else's opinions and thoughts. When you guys are house hacking, are you guys looking for something that offsets your entire rent? Like Jay, are you looking for something that offsets your entire rent? I know Alex, for you specifically, you were willing to pay some of the rent when you moved down to Torrance, right?
Yeah, but when I was doing the Airbnb, it actually paid almost the entire amount once it started really humming and coming along. So like she's giving that example. I don't really like that example because like she would still have to pay $1,600.
That's high.
And there's just not a lot of upside potential. And that's why I'm a bigger fan of getting more units or more, more potential income from the property to continue to offset, what we're paying as the investor, as the person that owns the property.
Yeah, definitely.
I also wanted to highlight a quick example of my other house hack that I did that I didn't get a chance to cover. Do we have time for that?
Yeah, tell us about it.
Okay, so this is a great story, you guys, because when I was living at this place in Torrance, I ended up getting this hot off-market deal that ended up buying the property, and I bought it subject to. So, I mean, we don't have time to go into the details, but essentially I bought the property. I took over the mortgage payment from the previous seller. I now own the property, but the mortgage she was paying, I was now paying. Okay. And then it was a 4-bedroom, 2-bath house. But this is where you got to be creative. And we noticed that the 2 bedrooms, 1 bath, if we kind of separated one little side, put like a wall up, essentially that front house, it would be a front house where it's like a living room, a bathroom, 2 bedrooms. And so I started doing Airbnb on the 2 individual bedrooms up in the front. And we wouldn't really use that space of the house. We were in the back house, and it was not in the back, but the back side of the house with 2 bedrooms and it was like a family room, but we turned that into like more of our living area. And then I had a detached garage that I turned into my office. So it was essentially a house office hack because the 2 Airbnb bedrooms were bringing in about the mortgage payment. And then my office was for free. And then my living expenses were essentially for free. So I was getting an office, and I was getting the living in a nice house in the San Fernando Valley in LA for only probably a couple $100 a month, and did all that. So you see how like it not only helped my business, it helped my life, and then I made a profit on that, all because it was kind of like that house hacking strategy, live and flip, all kind of combined. So there's so many ways you can squeeze, everything you can out of that deal if you structure things right and you make some sacrifices. Because I could have just lived in that big house, and not had anybody paying any rent, and it wasn't even that big of a mortgage payment. I could have afforded it, but I just, sacrificed, and then it ended up working out. I just wanted to share that, you guys, because it's really powerful if you have the right mindset and then you structure your deals this way.
Yes, I could not agree more with that. And knowing your end goals, and sometimes you have to, sacrifice for a year or something, and then eventually after a couple of years, it's all just going to come back and pay forward. So that's a great story, Alex. I think this is a really great, valuable webinar for everyone. Hope everyone enjoyed it.
Yeah, and congrats to everybody in the chat that was mentioning that they had just taken down a house hack recently. I know Rory said he just took his down. Congratulations, Rory. I saw a couple other people in there and a couple other folks in the room saying that they're excited to start looking for their first house hack. Guys, I did post a chat reminder. It's the Facebook group. Just remember to go in and log in on the Facebook group. I saw Ulysses is on the phones and he's making cold calls, and he'd love some feedback. So if you guys get a chance, go check out his Instagram. Let him know how he's doing on his cold calls. I always love listening to other people's calls because you always hear that extra little piece that maybe Ulysses is doing that you're not doing. I know when I listen to Alex call, I always end up hearing an extra thing or two from Alex that I wasn't asking. The questions that I'm not asking now become questions that I do ask. So listen to Ulysses when you get a chance. I'm also going to post one more link in here, guys. This is for a Calendly link. If you do want to jump on a call with Alex, Jay, and I, if you have anything that's kind of holding you back that you need help getting through, this is a quick 30-minute call that you can set up and set up a call for Jay, Alex, and I to kind of help you and get you through that roadblock and get you over that hurdle and get you to that successful place that you're looking to get to. So without any further ado, Alex, any last words? And we'll go and close this thing out and get ready to rock and roll next week.
I don't really have anything else, guys. I just want to say thank you again for attending. Anybody that's new, thank you for joining us. Everybody that's repeat, I appreciate you guys. Love sharing these, these stories and the journey, and just being able to show you guys that, that investing is just not flipping. It's not just one thing. It encompasses so many different ways, but you really got to make some sacrifices. And you really got to look at it and from a perspective of, is this a wise financial decision? And always continue to progress, take it to that next level, you guys. There's always another level. There's people that I'm around that are at the, making a lot more money than I am. And there's people that are doing a lot less that, we're helping now. And we're all on a different level, but we're just here to, to share, help out. And that's why we created the Facebook group. So check it out. You guys feel free to, to definitely stay engaged there in between the webinars. And if you guys have any questions, we're always here to help. That's all.
Hey, Alex, can I add just one thing?
Please do.
It's Rory here. So I've been analyzing house hack deals like crazy. Will, like you said, I just went to escrow on one. And one of the biggest challenges, like you were mentioning, Alex, is vacancies in these properties. I'm just here to say that today, between like the last 36 hours, there's about 6 duplexes across LA fully vacant that are FHA eligible, and I'll post all of them in the Facebook group.
Let's
Amazing.
go. So you guys heard it right
Warren's
there.
killing
This
it.
guy already got into escrow on his deal, and now he's sharing some deals back with the rest of the group. Again, guys, if you're not a part of the Facebook group, if that wasn't a big enough indicator on why you should join, I don't know what is. Rory, we appreciate you, man. Thanks so much for sharing those.
That is amazing. Thanks so much. And congratulations on doing your first house hack. So proud of you.
Yes, sir.
So that's great.
I
Thank
see
you again,
somebody already
everyone.
calling dibs in there. Rashawn said dibs on those. So yeah, guys, again, Rory and I have been looking at house hacks and analyzing deals. I'm sure that if he found 6 of these deals, that there's going to be some meat on them. And again, finding ones that are vacant is pretty impressive as well. So thanks so much for sharing, guys. Please use that Facebook group. Share what you need. Share what we can help you with. And if there's anything that the group can help with, it's an open forum there. So please do share and see how we can help. All right. We'll see you guys on the flip side. See you next week. Stay safe out there. All right.
Take care.
Thank you.
Thank you, guys. Thanks, Christine.
Thank you.
Good seeing you.
Yeah,
Nice seeing you.
thank you.
We'll see you, Doug.
Thanks, everybody.
George, I see you out there. Drive safe, man. You too, Andy.
See you next
Our road
Wednesday.
warriors out there on the road. I love it. Ulysses, you're going to get some feedback, man. I hope you're ready.
Yeah, man, for sure. Thanks, man.
All right, guys. We'll see you.
Good seeing you, George, as always. Andy.